So good evening and welcome to today's class. And today we are going to be talking about cash flow. What we are going to be talking about cash flow statement. We are going to be talking about what we are going to be talking about cash flow statement. And the regulatory standard that deal with what cash flow statement is what we call what IS7. IS7 deal with what IS7 deal with cash flow statements. And cash flow, according to what? According to IS1, which is what? Presentation of financial statements. There are 5 statements that company need to what? That company need to prepare. And one of them is what? Your statement of profit or loss. We also have statement of what? Statement of financial position. We also have statement of what? We have statement of profit or loss and other comprehensive income. That is one. We also have another one, which is what? Statement of changes in what? In equity. We also have what? The third one to be what? Statement of what? Financial position.
Wait,
Then
what's
we
the
also
one?
have the second one is statement of changes in equity. The first one is what? Is statement of profit or loss and other comprehensive income. The second one is statement of changes in equity. And the third one is statement of financial position, SFP. Statement of financial
Your
position.
voice is very faded, very faint.
The first one is statement of profit or loss and other comprehensive income. The next one is statement of what? Statement of changes in equity. Then the third one is statement of what? Statement of financial position. The fourth one is what we call statement of what? Statement of cash flow. And the fifth one is what we call the note to the account. The note to the account is just that the financial statement that we are preparing now, we are preparing it on the what? We are preparing it in the summarized form. Even though your financial statement worth billions of worth of naira is still what? Your statement of financial position. Let's say the statement of your financial position now, the value of your asset is what? Is billions of naira. It's still going to be on what? On a one page. Even though that the profit that you made during the year is what? Is billions. It's still going to be on the what? On the one page. So we are not going to provide what? Oh, we can just see what? Revenue 1 billion. So how do we derive this revenue now? We can have a note to it that will show that, oh, this is how we derive our revenue. We also have statement of what? We also have, so in what now? We also have statement of financial position. So the fifth one is what we call note to the account. And the note to the account is just the summarize of what we have. How do we derive that particular figure? It's just like our working. So in IS1, we don't usually call it working. We call it the note to the account. So you can just say now that the total admin cost is 10 billion. The total admin cost is 10 billion. So how do you derive that 10 billion now? Then you can give us a note to the account that, these are the different components of admin. This is what we derive this is how we derive the admin cost. Salary and wages there, director remuneration is there, and other administrative expenses as well. So the note to the account now will show the note to the account will show how we derive the figure that we are presented in the financial statement. So our focus now, it will be on on IS7. It's going to be on on IS7, and this is a very important statement that every organization as well you also need to prepare. And I'm very sure every one of us listening to me now, this is not the first time we heard about cash flow statement. Some of us, maybe we are coming from foundation or during our elementary study, at least we learned what's called cash flow statement. So now in cash flow statement, we have We have two methods of what? We have two methods of preparing what? We have two methods of preparing cash flow statement. We have what we call the what? The direct method, and we also have what we call the what? The indirect what method. There are two what? There are two methods of preparing what? There are two methods of preparing cash flow. We have direct method, and we also have what? Indirect what? Indirect method. Cash flow is how many ways can we use to prepare what? Cash flow. We can prepare our cash flow now using how many ways? Using two. We have what we call direct, and we also have what we call what? We also have what we call indirect. So, and majority of the time, we are going to be focusing on what? On indirect. And this is the last time when you get to the what? To the professional level, there's nothing like direct anymore. We are only going to be focusing on what? On indirect what? On indirect method. So now this is what? This is the format for what? For cash flow. And cash flow is divided into how many? Cash flow is divided into three. We have what we call cash flow from what? From from operating activities, which is the first one. We also have what we call what? Cash flow from what? From financing what? We also have what we call cash flow from financing activities. We also have what we call cash flow from what? From investing what? Activities. Cash flow is divided into how many? Cash flow is divided into three. We have what we call cash flow from what? Cash flow from operating what? Activities. So let's go now. Let me write something. Please hold on. What is happening to this USB? Please hold on. Please hold on. So cash flow statement now is divided into how many? Is divided into three. We have what we call operating activities.
You said operating, financing, and which other one?
Just hold on. Let's continue now. This is the first one, operating activities. The second one is what? Is investing activities. And the third one is what? Is financing what? Is financing activities. So cash flow statement now, these are the what? These are the three what? These are the three division of what? Of cash flow statement. Operating activities, investing activities, and what? And financing activities. And I want to give you something now that which you need to have at the back of your mind. When we are preparing what? Cash flow statement now, in regardless of the word of the method, whether we are using what? Direct method, or we are using what? We are using indirect. Either of the two. These are the what? These are the two methods that we can use to prepare what? That we can use to prepare this cash flow statement. Either we are going to use what? Direct method or indirect. But majority of our attention will be given to what? To direct method. I'll be sorry, to indirect, because this one is very, very what? This one is very, very simple. And this is the last time that you're going to be coming across something of direct. When you get to what? To the CR, there's nothing like what? Direct anymore. What we just be focusing on is just what? Indirect method. So cash flow statement is divided into how many? It's divided into three. We have the what? The operating activities. We have the what? The investing activities. And we also have the what? The financing what? The financing activities. So now, when you are not preparing cash flow statement now, we all know the what? This division already. sure of that. At least this is not the first time of hearing cash flow statement. So now, when we now want to prepare this cash flow statement now, if you want to prepare this cash flow now, these are the three division of cash flow. Now, please don't forget this. When you now want to prepare your cash flow, you start from the first one, which is what operating activities. So in the operating activities now, where are we going to get the information from? If you want to prepare operating activities now, where are we going to get the information from? Please don't forget this. First, P&L of the current year. P&L of the current year. That's one. Number two, current asset, and what? And current liability. And current liability. And the third one is what is additional information. Now, when you are preparing your what now? When you are preparing your operating activities, which is the first one, where are you going to focus on? You are going to focus on one, operating activities. Operating activities. Then the next one now, please don't forget this. When we are preparing operating activities, and it is only operating activities that can be a little bit that can be.
Mr. Stu, if you're using an earpiece, your voice is fading and coming back. So I'm struggling to hear you.
I'm not using earpiece.
I don't know what's happening.
Can you hear me now?
Yes, I can.
Operating activities. Now, when we are preparing operating activities, these are where we are going to focus on. We are going to focus on the P&L of the current, that is the statement of profit or loss and other comprehensive income for that current year. Because there are some times that whereby this profit or loss account, the statement of profit or loss and other comprehensive income will be presented to you in comparative basis, where you are going to have last year and you also have the current year. So you only need to do what now? You only need to focus on the one of you only need to focus on the current year alone. You don't need to be looking at the statement of the statement of profit and loss and other comprehensive income of last year. You only need to focus on you only need to focus on the current year. And then the next thing that you have to focus on is what we call current asset and current liability. You need to check their you need to check their current asset, and you also need to check their current liability. Then the next one, which is the third one, is you need to check the additional information. So when you are preparing operating activities now, these are your focus. This is where you are going to get the data from you to prepare this particular report. Then the next one is financing investing activities.
The current asset and current liability, is it from the current year?
We are going to check at it comparatively. Okay. Income statement is only for current year, but statement of financial position, you're going to look at last year, and you're also going to look at the current year as well. Then the next one is statement of investing activities. Investing activities. So when you are preparing your investing activities now, where do you need to focus on? You need to check the non-current assets comparatively. You need to check last year, and you also need to check the current year. You have to look for the movement. Once it is item of financial statement, you have to be looking at it comparatively. Look at what do you have last year and what do you have this year as well. But for income statement now, you only need to look at it on this current year alone. Okay. So the next one now, you now need to go you need to check the additional you need to check the additional information as well. You need to check the additional information. So when you are preparing investing activities now, These are your what? These are your focus. This is where you are looking what? This is where you get the data from, which is what their non-current assets and what the additional information. When you are preparing what investing activities now, please don't forget this is where we are going to focus on their non-current assets and their what and the additional information. And the last one now is what is financing activities. Is financing what? Financing activities. If you are preparing what financing activities now, where will you get the information from? One, you have to check the word, the equity. Check the word, check the equity, except what? Except, don't touch, retain any, and don't touch what? They are any. They can call it retain any. They can also call it what? Reserve. So you don't what? Don't touch that particular one. Just accept that. Retain any. They can also call it what? Reserve. They can also call it what? Accumulated what? Accumulated profit. So these are the what? These are the three things that you're not going to tamper with under what? Under retain any. I'll be sorry, under what? Under equity. You check the word, you check their ordinary share, you check their what? Their share premium as well. You check the movement. What do you have last year? What do you have in this particular what current year? So that is what financing. You are going to what? Check the what? The equity first. What do you have last year? What do you have this year? What is the movement? Then the next thing that you are going to do now is we need to check the what? The non-current what? The non-current liability. And the what? The third one is what? Is additional what? Additional information. So when we are preparing what? When you are preparing financing activities now, these are where you need to what? This is where you are going to get the data from. The equity, except what? Except they are retained earning. They don't call it retained earning, they can call it reserve. They can also call it accumulated profit. Then you also check their what? Their non-current liability. Then you also check the additional information that is provided for you. So these are where you are going to get the what? The information from to prepare this particular what? To prepare this particular report. Cash flow is divided into what? Is divided into three. Okay. We have the what? The operating activities. We have the what? The investing activities, and we also have the what? The financing activities as well. If you are preparing the what? The operating activities, and this is where the what? This is where the work is. This is where the what? This is where the work is. This is the only one that can really stress us some time. And this one is the one that will carry the what? The highest mark as well. Operating activities is very, very important. So when you are preparing operating activities now, where are you going to get the data from? The profit or loss and other comprehensive income of the current year. If the examiner presents you with what? Income statement on a comparative basis, you only need to focus on the word. You only need to focus on that part, on the current year. Forget about the last year. Once it is income statement. Check their current asset and check their what? Their current liability as well. Then their what? Their additional what? The additional information. So, and under the what? Under the current asset, there are some things that we are not going to what? We are not going to tamper with as well. And one of the things that we are not going to touch now is also what? Under the current asset, then we are not going to touch either what? Cash, or they can also have what? Bank as well. Under the what? The current liability, we are not going to touch what? They can have bank what? They can have bank overdraft. So we are not going to what? We are still going to come across that one later. So just leave these two items in current asset. Their cash balance, they can also have what? A bank balance. Don't touch this. Under the current liability, they can have bank overdraft. Don't leave that. Don't touch it as well. Okay. They can also have in the current liability, they can also have tax. They can also have tax, leave tax as well. And this is the word, this is the format. Once, don't forget this, once you know what, where are you going to take the word, where are you going to get the data from now? If you are preparing operating activities, you get this from what? The POL of the current year, your current asset and currently what? Current liability. You also check the word, the additional information as well. Then when you're not preparing the word, the second one, which is what? The investing activities, you only check the word, their non-current asset and what? And the additional information that you have. And the next one is what? Is the final, which is financing activities. Financing activities now, just check the what? Check the equity, check the what? What else again? Their non-current liability, and check their what? And check their the non-current the non-current liability, the equity, and the additional information. So please now, cash flow statement is not a bad thing. It's a very simple statement. Okay. So what we now need to do now, please try as much as possible now. Have a word. Let's just lay like a 1 minute now. Look at this format very well. Because in accounting, there are some things that there are some topics that are not difficult. But what we need to do is what we need to understand the formats. And I'm sorry, I could have sent this particular note very well far ahead. So that what you just need to do for me is you could have really understand the format. There are some things that you need to understand the formats before we can really know it very well, honestly. And there are some things in accounting that it doesn't really have to do with what formats. You just need to understand the basic principle behind it. So this is what cash flow statement are using what indirect method. And this is a format. We're going to start from what profit before tax. Profit before tax. And then the next one, we are going to say what hard depreciation charges, amortization, because sometimes we can also call it what item that does not involve movement of cash. If you debit your P&L now with a depreciation, isn't that depreciation now? You are treating it as what? As expenses. It's not as if you are paying it to someone that, oh, I depreciate my asset now. The depreciation for the current year is what? Is 500. It's not as if that 500 naira is what is outflow. It's not as if you are paying it to third party. You are just making a provision. It's not as if so that money now we call it what item that does not involve movement of cash. Depreciation is not a cash outflow items. So if you also have goodwill, let's say for example now at least impairment of goodwill. If goodwill was impaired, impairment is just like extra depreciation. Asset that you have charged depreciation or amortization to, then you can also do you can also subject them to impairment test as well. So if you have impairment test, and impairment usually relate to goodwill. So it's just like depreciation as well. It's already subtracted from It's already subtracted from before we arrive at this profit before tax, because they are expenses. Before you arrive at profit before tax, depreciation has already been removed. Amortization has also already been removed. If you have impairment as well, it's already been subtracted. So we are adding it back. The interest, or sometimes we call it the finance cost. The interest or the finance cost is already is already been subtracted before we arrive at profit before tax. So the interest that you're paying, because in operating cash flow, when we say operating is your core business. What are you meant to do? So we really want to know the cash flow. What is the cash that you receive from your operating activities, from your core business? So had the interest is already in the interest is already in the income statement. They do not call it interest, they can also call it finance cost. Then had loss on disposal of non-current asset. So let's say, for example, now you dispose your non-current asset and you made a profit. The profit is already here. It's already added to this particular profit before tax. So we need to remove it, because selling of capital item is not our core business. So the profit that you have from the profit that you have from disposal of your non-current assets, we need to do we need to subtract it out. And if it is a loss, if it is a loss could have already been a loss could have already been subtracted before we have this profit before tax. So if it is a loss now, we are now? Loss now, we are adding it. If it is a profits could have already been added to this, we are subtracting it. If you sell your non-current asset now and you made a profit, that profit is already added to this number before we arrive at this profit before tax. So assuming profit is already added, so we are doing what now? We are removing the profit. If it is a If it is a loss, we are doing what? We are adding it back, because loss could have already been subtracted from this before we arrive at this profit before tax. Let's say you also have a dividend income. That will also be in the income statement. That let's say for example now you have a building and you are renting it out, and people are paying. That's like a dividend, or sometimes we call it the rental income. So that particular income that you receive now is already being credited to your P&L. So what we are not doing is that what we are removing it. What we are doing now is what we are removing it. So whatever we have now, that is what we call what? Operating cash flow before changes in what? Before changes in working capital. Operating cash flow before what? Before changes in what? Before changes in working capital. Then we are now going to have an heading for what now? So all this information now, starting from what? From profit before tax down to what? This particular what dividend now. Where you are going to get that information from is from the additional information and the POL of the current year. All this information now, starting from the first one, which is what? Profit before tax. Where are you going to get the information from? It will be from what? The POL of the current year and the additional information. So this one now, which is the second one, changes in what? Changes in working capital. Where are you going to get this particular one from? Is from the what? The statement of what? The statement of financial position. It's from the statement of what? Financial position, which is your what? Your current asset now and your what? And your current liability. That's where you are going to get the data from. Add increase or what? Don't worry, you are going to see how I'm going to do this now. Then if you have what, just look at the what, look at the tax. We are still going to show how we calculate tax. Okay. So just what the working capital now, the receivable, the inventory, the payable, and we can have some what, maybe prepayment or accrual as well. We're also going to make the what, we're also going to make the treatment. So if your inventory is what, your inventory, your receivable, once your asset is what is decreasing. If your asset is what is decreasing, let's say what inventory that you have last year is what is 500. What you now have this year is what is 400. That is good. It's like what? That is a cash what? That is a cash inflow. Inventory that you have last year is 500. What you have this year is what? What you have this year is 400. That is a what? That is a cash inflow. So if our asset is what is reducing, if our asset is what is reducing, that is a what? A cash inflow. So if our what inventory, our receivable, our prepayment, if they are increasing, that is a what? That is a cash outflow. That is a what? That is a cash. That is a cash outflow. Can you hear me?
I heard what you just said now. Can you hear me? But I didn't hear what you said before then.
Okay, I'm saying now that if our asset is reducing, that is a what? A cash inflow. Like this particular number that you have now, this 2 star, it signifies what? Cash inflow. But if you have something in what? In negative form like this, it is what? That is a cash what? That is a cash outflow. And under cash flow statement, we are only dealing with what is coming in, what is the cash that is coming in, and what are the cash that is going out. So if our asset now, the receivable, the inventory, the prepayment, if they are reducing, that is a cash inflow. But if they are increasing, that is a cash outflow. So if our liability, like the trade payable and the accrual, if our trade payable is if our trade payable is increasing, that is a cash inflow. You are owing someone last year 500, and this year you are owing someone 600. That is in cash flow. We see it as a cash inflow. You are owing someone last year 500. This year it is 600. So the 100 naira now is a cash inflow. Is a cash inflow. But if you are owing someone last year 500, at this year now it is now 400. So that is a outflow now. If our liability is reducing, it's a cash outflow. Because you are owing someone last year 500, this year 400. So that means that there's a difference of what now? There's a movement of 100 naira. So that 100 now is a cash outflow. So please don't forget, increase in what? Increase in liability is what? Is inflow. If our liability is increasing, is a cash inflow. If they are reducing, is a cash outflow. If our asset is reducing, it's a cash inflow, and if it is is increasing, is a cash outflow. So this is operating activities. Please have a look at this. So the next thing that we can now talk about now is what is investing activities. And under investing activities, don't forget, where are we getting the data from? Under investing activities is from the what is from the non-current asset and an additional information. That is where we are getting that is where we are getting the information from. If it is if it is investing activities, where are we going to get our data from? It's from what is from non-current asset and an additional information. And the one that can really stress us in cash flow statement is operating activities. Once the operating activities is what is good, then the remaining one are not bad. So proceed on disposal of non-current asset and an investment. Let's say you sell your non-current asset or some investment is a cash inflow. Let's say you also receive dividend and interest received. Dividend and interest received. And you can see here we are lessening it because it is not an operating item. Dividend that you receive is not through your selling and rendering service. No. And that's why we are taking it to under investing activities. So it's not operating activities. When we say operating activities has to do with our selling and buying. Whether you're selling a certain product or you are rendering a service, that is your operating activities. But if you are now receiving if money is not coming in apart from our core business, then we'll categorize that as investing activities. So if you receive interest or dividend from your investment, that's the cash inflow. If you paid cash paid for acquisition of non-current asset and investment. If you also paid that is you buy some non-current asset, that is also a cash outflow because you are paying. So these are things that we have under the investing activities. Don't forget, investing activities, where are you going to focus on? Majority of it is from the non-current asset. Then you can also check the additional information as well. So the final one now is financing activities. Financing activities. And don't forget, under financing activities, where are we going to get the data from? It's from the equity, except retain any, and long-term liability. So cash received from issue of shares. Let's say you issue your share. Your ordinary share last year was 400. Now it is 550. So it means that there's the issue of shares of now 50. You can also issue debentures, cash received on bank loan and other borrowing. Money is also coming in. If you are not paying you are paying cash paid on prepayment of debentures or preference shares. Is money is going out. I'm paying my debentures order, my preference share order. Then cash paid on repayment of bank loan. That is the money that I received initially. I'm also paying them back. Payment to lessor under lease agreement. Under lease agreement. Then we also have interest pay, and we also have dividend we also have dividend pay. And these two, it is allowed that this particular one now, interest paid and dividend paid based on IS 7, you have the option of either bringing this interest paid and dividend paid to operating activities, or you take it to financing activities. You have the option that these two last items now, interest and dividend, based on IS 7, the current version of IS 7, because IS 7 has been amended. But the one that we are still using now, it is still you are allowed to do you are allowed to either take interest and dividend as operating activities, or you take it as financing activities. Okay, so please don't forget this. Don't forget this. So these are the formats, and cash flow is a very, very important topic in our exam. So the next thing that we now need to look at now is what we call cash and cash equivalent schedule. Cash and cash equivalent schedule. And when we say something is what is cash cash equivalent, it means that was something that you can convert to cash within 3 months. That's what we call what cash equivalent. Meaning that what things that you can convert to what things that you can convert to cash within what within 3 months. That is what we call what? That is what we call cash equivalent. Meaning that was something that you can do what? Something that you can convert to cash within what? Within 3 months. Are what we call cash equivalent. Cash and cash equivalent. Meaning, and they are subject to what? To a low risk. So, and when you are giving what cash flow what? If you are giving in the exam now, you are giving a question on what? On cash flow, which there's a high probability that you always come across it. Either what publish account or cash flow statement, you know that one is going to come out. And sometimes you can see the two. So now, before you start cash flow statement, before you start solving the question now, first of all, you need to determine the cash and cash equivalent at the beginning, and you also need to determine the cash and cash equivalent at the end. When you are preparing what cash flow statement, first of all, before you start preparing the solution now, you must have it at the back of your mind. You must know the answer that you are driving for, which is what, look at this now. We have this what? We have this X. And what made up of this what? What made up of this X now is what? This X is made up of A, which is our operating activities, B, which is our what? Our investing activities, and C now, which is our what? Our financing what? Activities. So addition of what? Addition of everything now will give us what? We give us X. So before we start, we must know all these 3 items. Cash and cash equivalent at the end, cash and cash equivalent at the what? At the beginning. And if there's a what, whether increase or decrease in what? In the cash flow during the year, we need to know that as well before you start. You need to know the answer. You need to know the cash and cash equivalent at the end, cash and cash equivalent at the what? At the beginning, and cash and cash equivalent on the changes, whether there's increase or decrease in cash and cash equivalent during the year, which is our what now? That's our X. So before you start that cash flow statement, you have to have that at the back of your mind. And let's see now. So you have to get this was schedule. You are going to have last year, and you also have what? You're also going to have the current year. Last year now, let's say we have what? Cash in hand at what? Cash in hand. We can also have what? Cash and bank. We can have what? Short-term investment like a treasury bill. Then we can also have what? Bank overdraft. You can see all the assets are what? Are positive. The liability now are what? Are negative, which is like what? The bank overdraft. And that's why I make mention of it earlier as well. When you get to what? When you get to the non-current, the current liability, you are not going to touch what? Cash, the bank balance. Under the current liability, you're not going to touch what? The bank overdraft, and you're not even tamper with what? With the tax, because you are still going to make adjustment for them. So this is what? The cash and cash equivalent. Don't forget cash in hand, the balance at bank, short-term investment, and we can also have what? Bank what? We can also have bank overdraft. So these are items, and you have to prepare this before you start your solution, so that will really guide us on things that we are expected to what to do. That is, this is what we are looking for. We are looking for 100. We are looking for 200. So once you know that what this is what I am looking for, then it will be very, very easy. So now look at this one now without words. Okay, I'm not in a hurry, sir. My driving force is what? Understand the words, understand the form. Look at this format again now. Just spend a time, because this is statement. And anything that has to do with statement now, it requires what? Format. So this is a format for what? For cash flow now under indirect. Forget about the direct for now. Let's focus on what? The indirect. Forget about direct method now. Have a look at this method. This is cash flow statement using what? Using indirect method. So have a look at, just look at this, because that's the driving force. Okay, so please have a look at this for some seconds now, then before we start doing the practice question. What, don't forget, if you are preparing operating activities, where are you going to get the what? Where are you going to get the information from? The current year, the POL of the current year, the current asset and the current liability, and what the additional information. We are preparing the second one, which is what? Investing activity. It is from what? It is from the non-current asset and the additional information. And the last one now is what? The last one is what? The last one is the financing activities. If we are preparing financing activities, where should we focus on? Check their equity, accept their what? Their reserve or their retained earning, or call it accumulated profit. Then also check their what? Their non-current liability as well, and check the what? Check the additional information. So cash flow statement, I always prefer them to even what? Test you what? To give you question on what? A cash flow statement and publish account. Because this one is just one statement. And the only one that can be a little bit stressful is operating activities. So once you're able to get the operating activities very correct, then the other one, they are not really what the information that you're going to use is not really that much. So have a look at this format now, please. Before we start solving the question now. Please don't forget this. It's important. So can we go? Are you okay with this? Hello?
Hello, I didn't know that you muted my mic. Yeah, I'm
Yes,
still
sir. I
looking
was
at
hearing
this.
background noise.
Oh, sorry about that. This place that you said trade receivables increase and decrease. So when trade receivable increase, that means people that owing me outside, they are more. That means
Come
there's
again.
cash outflow.
And come again, please.
Increase in receivable means that there's cash outflow.
No, increase in receivable. What are you saying?
Yes, there's increase in my receivables.
Yes. Money is not coming out.
Same
Money
with
is
less.
Yes, because money is not coming in. Last year, someone is owing you what? Is owing you 500. This year is now owing you what? Is now owing you 600. Are you receiving any money?
No, so what will I less here? Is it the 100 naira?
Yes, it's the 100. We are just looking for what? For the movement. What do you have last year? What do you have this year? Don't worry, we'll solve the question and you see.
Okay, I'm good with this part. I don't
At
know,
least
am
you
I
have heard
supposed to
about.
cram all these things?
No, there's no, and this is not your first time paying cash flow now. Don't cram it. Just learn it. At least is and now oh you're good in cramming. No, just learn it. Don't worry. It's not something. Once you are used to it now, at least even though I wake you up in the middle of the night that if you have what profit on disposal, what are you going to do? At least you know that profit on disposal now. Let's remove it from our profit before tax. Abi? So just learning by how. I don't be afraid of it. Don't worry. At least you can
I tell him not
testify
to be
to it.
afraid. Exam is in 2 weeks.
And
I
there's
don't know
no
how I'm
need.
not supposed to be afraid.
No, there's no need of afraid now because first of all, this is not the first time that you are hearing this information of cash flow. Abi?
I
That's
said this is
one.
not the first time. Where am I supposed to have heard of it?
No, it's in foundation.
Foundation that I did when? Last year.
And now
So
there's you do you do
between that
financial
time and
accounting?
now, do you know how many things I've done in my life? I can't remember what I was taught in foundation. I just know I passed the exam.
But let's say, do you remember how many things that I've done in my life? I thought you are not doing anything. All right, now don't
I
worry.
remember.
And but okay, you see what you just need to do. Though as you are learning things, try as much as possible to have it at the back of your mind that you are learning it, that you don't want to forget it. Okay, so that if anything come across, at least as you are moving, or at least you are working in accountancy, So at least you're able to know that, oh, these are what we need to do. It's not that, okay, I'm no more in this particular level. You understand? Because since you forget now, so that means that I have to do what? More extra work. So let's go now. But if you remember now, I know that my work is going somehow less. Look at this question now. What are we required to prepare? We're required to prepare what? Prepare the statement of what cash flow for the year ended 31st December in accordance with what? IS7, using what? Using indirect what? Using indirect method. Then we also have B part now. Prepare the net cash flow from operating activities using what? Direct method. And you can see direct method, whether you are using what? Direct or indirect, it is only the operating activities that will change. The investing and the finance will remain the same thing, in regardless of the method that you are using. So the financing and investing will remain the same, in regardless of the method that we are using. So, but if you are using what direct method, the way we are going to prepare our cash flow using direct method, it will change from the way we are going to use to prepare what under what indirect. But the two segments still remain the same thing, which is what the investing and the finance will remain the same, whether you are using what direct or indirect. And please, I want you to do what? I want you to please listen to me very well. You know you are in what? If you qualify now, ICANN is going to categorize you as what? As member in public practice. And when we say member in public practice, are those that are working in accountancy firm. And so you have to watch, so please try as much as possible. Things that you are learning now, please learning as if you don't want to forget it. It's not just only about what for the exam alone, but it's all for our own personal development as well. And God will make it easy. So now let's start with question 1. Baba Nigeria Limited is a company located in Lagos, and it is engaged in hotel and tourism business. The financial statement of the company are shown as follows. This is a statement of profit and loss and other comprehensive income for the year ended December 2018. We are also provided with their statement of financial position as well. Then we are also giving some additional information. So now we are asked to what now? Now asked to prepare the statement now using what? Using indirect method. Now I informed you earlier that before you start cash flow, now this is a cash flow question now. Before you start, once you know that the exam now you are giving a cash flow, and please don't run away from it. It's a very thing that at least you have a high chance of whenever even me that I'm taking you as well. Whenever there's the examiner bring cash flow, I pray that they should bring cash flow. Because if you are giving cash flow, I prefer them testing you on cash flow statement than public account. Because publish account takes a lot of time. They are like you have to do 3 things. You have to prepare the statement of profit or loss. You have to do the statement of changes in equity, the statement of financial position. No, but this one is it's just one. And the only one that can stress you is operating activities. The remaining 2, investing and financing, no, they are not bad. Okay. So now, let's now go now. Let me open the worksheet now. So don't forget to write the name of the companies. Then we say what? Statement of what? Statement of cash flow. Statement of cash flow. for the year ended December 31 was the year 2018. Then the first one, we start from our what? Operating what? Start from our operating activities. Operating what? Operating activities. So based on the format now, let me ask, what was the first item that you're going to have under operating activities? Can you remember? What was the first thing that we are going to have under what? Operating activities now? This is a cash flow statement now. What was the first? Profit before what? Profit before tax. Thank you very much. Profit what? You can, in the exam, there's no need of writing it full, just so you can short it. Profit before what? Profit before taxation. So now, and where are we going to get this information from now? That will be from what? That will be from the POL. So let's go to the what? Let's go to the POL now and look at what's their profit before tax. This is their profit before tax of 40,000. This is the profit before tax. 4,800. Then we'll now say what now? Add back what? Add back non-cash item. Non-cash items. So, and one of the best example of what? Of non-cash item is what? Is depreciation. So we have to look at what? We have to look for it now, because company will always depreciate your assets. So depreciation will always what? Depreciation will always there. So now we are adding it back now because it's already what? Subtracted. Before you have this profit before tax now, you have already removed depreciation from it. So now we now need to go back to the what? To the question now and determine what is the profit, what is the depreciation. And most of the time you get that from the what? From the additional information. Additional information one is saying that what? Property, plant, and equipment with a carrying value of what? 23,800,000 was sold during the year for this particular amount. The asset originally cost 38. Okay, there's no problem. Look at the additional information 2 now. Additional information 2, depreciation on what? Property, plant, and equipment for the year ended is what? Is 34. So that means that what? The depreciation charge during the year is what? Is 34. That's it. Then the next one, which is what? Let's start from the what? The first additional information now. That let's check whether there's a what? There's a profit on disposal or there's a what? There's a loss. You can see now that we are told that what? We are told that a property, plant, and equipment with carrying amount of how much? With a carrying amount of this was sold for how much? Was sold for 24. So do you have a profit now or there's a loss? All right, now please determine this now. There's a profit. Profit of how much?
It's 850.
850.
850,000.
Okay. You can't tell me you're tired. We have what? Profit on what? Profit on disposal. Please, I want you to please, as I'm doing it, if there's any area that you want me to what to explain, please call my attention to it. Because if I'm saying that what FR is what is easy to pass, the reason why I'm saying that it is what it is easy to pass is because of this word. We know the topic that the examiner will set. That's the reason why I'm saying that what FR is easy to pass. It's not because I'm taking it. But the reason why it's easy to pass is that what the key things, the key topic that the examiner has always been tested at what it is always there. It's not like what other calls like your performance management now. That okay, you don't really know the area, but FR, anything financial accounting, whether financial accounting, the corporate reporting or financial reporting as well, or financial accounting, area that the examiner is going to test, you are aware of it. So we just need to do what now? Just need to try as much as possible to good on that area. And we can't know everything, but we have to know the key. So there's a profit on what? There's a profit on disposal now. There's a profit on what? On disposal. Then how do we derive this profit on disposal? We are told that what you sell it for what? 24,000 what? Let me go back to the question. What's the amount? 24 something. You sell it for how much? 24,650. But the carrying amount is what? The carrying amount is 23,800. You sell it for 24,650. But the carrying amount, the book value of it as of now is what? Is 23,800. So 24,000 what now? 650 minus what? 23,800. What do we have? We have what? 850. Then that 850 now, we need to do what now? We need to subtract it because it's not from your what? It's not from your core business. It's not from your what? It's not from your operating activities. So we'll do what now? Less. If it is a loss, we are going to add a loss because loss could have already been what? Could have already been subtracted from this. So since this 850 is already what? Is already included here. But what we want to know is what? We want to know your what? Your actual cash flow from your core business. Your actual cash flow from your what? From your core business. That is what we want to what? That is what we are trying to derive. Your cash flow from what? From your core business activities. Then we're always going to have what again? We're only going to have finance costs as well. That will be in our what? In our POL. Our finance what? Finance costs. If you do not call it finance costs, we can also call it what? Interest. And that will be in the what? That will also be in the POL. We check the POL now. We are going to see the what? We are going to see what? You can see we have finance costs. Finance costs of how much? 1,000 what? Sorry, 4,250. That's the what? That's the finance cost. So we are going to what? We are going to add it. 4,000 what? 4,250. 4,250. So let's check the what? Let's check the additional information again. Is there anything? Is there impairment? Is there amortization? Depreciation, we have used it. They said dividend paid during the year. Dividend paid. So that means that the company is paying dividend now. Is what? 4.2 million now. It's reported in the statement of changes in equity for the what? For the year, and that is what? That is fine. Dividend paid during the year was this amount. So in this particular question now, what we just need to do, add everything together. Now, what do we have? From 34,000 minus 850 plus 4,250. What do we have? And what do we have, please? Because I want to tell you something.
I mean, I'm checking it.
34,000 plus 4,250 minus 850.
37,400.
34,000.
37,400. 37,400.
So plus 4,800. This is now what we call what? This is now what we call net cash flow. Net cash flow before what? Before changes in working capital. Before changes in what? Before changes in working capital. Before changes in what? In working capital. What do we have?
78,200.
78,200. So I want to show you something now, which I forget. That if you remember, once you are given a what? A question on cash flow, you need to do what? Know the answer first before you start. Know the what? Know the answer. And you are going to know the answer now by preparing the cash and cash equivalent schedule. You are going to know the answer now by preparing the cash and cash equivalent schedule. That's the only way we are going to. So I can say what now? Working one. Which is what? Say what? Cash and what? Cash and cash equivalent schedule. We are going to have what? At least there are 2 years. We have 2017 and we also have what? 2017. So we need to go to the question now that do we have a what? A cash? Where are you going to get this information from? It's from their current assets. The current asset now, we have cash and cash equivalent. Cash and cash equivalent now, last year, it was what? 4,250. Cash and cash equivalent last year was how much? 4,000 what? 4,250. Then what do we have what? What do we now have this year? What do we now have this year? We have what? We have 4,550. Okay?
4,550.
So you can say what now? Cash and what? Cash equivalent. Last year is 4,250, right? And this year is what? 2,550. Then we need to go to the what? We need to go to the liability section now, that looking for what they have overdraft, and you can see it as well. There's what? There's overdraft. There's what? Overdraft. Overdraft of last year is what? 10,200, and this year is what? Is 1,700. So overdraft. Last year 10,000 what? 700. Then this year it is how much? Then this year is 3,000. Oh, sorry, 1,000 what? 700. This one is 200. Sorry. This is 200. And this is what? 1,000 what? 700. So what do we now have now in total? What do we have for last year?
For 2018, 850.
For 2018, 850. Positive 850, right? That's fine.
Yes.
Then what do we have last year?
Minus 5,950.
Minus 5,950. So meaning that what? Our cash and cash equivalent at the end.
That 5,950 is in minus.
Yes, okay. At the end now is what? Is 850. Then cash and cash what? Cash and cash equivalent at the beginning is what? Is negative of what? 5,950. So what is now the what? Because we started with negative and we end with the what? We end with positive. So that means that there's going to be what now? Increase in what? There's going to be increase in cash flow. Increase in what? In cash flow during the year. So what is now the increase now? And that is what we are looking for. If you start with what? 8,000, you start with 5, well, do you know how you are going to derive this? I'm looking for something here. What will be here for me to have this? Think of it before I even give you what do we need to have here? That will say what? I have a positive number here now. I will now subtract this one from, so that we'll have this positive 850. What are we going to have? And I think of it. What do we need to have? What do we need to have here for me to have a positive of 850 at the end? If I start with negative of what? 5,950, and I end with what? 850 now. So what do we have here now? Hello?
I'm thinking. I don't know.
I still want you to think a little bit.
6,800.
And that's it. So that means that what we have how much now? we have 6.8. So now, once we now finish preparing our cash flow now, we have what? Operating activities. We have what? Our investing. We also have our what? Finance. If we add all these items together, we must have what? 6,800. If you not have 6,800 in the exam, don't change it. I hope you are getting what I'm saying.
You said I should not change it.
Don't change it. Still maintain what? That means that you are the one that made the mistake, or there's a what? Maybe sometimes the question may be wrong, but that's very rare. But you have to have what? If you solve it, if the question is right and you solve it the way you're supposed to do, it, we must have this 6,800. I'm not telling you now that in the exam, if you do not have this 6,800, still maintain 6,800. So that you're able to get the word, you're able to get the mark for this. All right?
Okay.
That is it. So before you start cash flow, know the what? Know the cash and cash equivalent at the beginning and the end, and know the changes as well. We know this is what we end with. We know that this is what we start with. So when we prepare our what? Operating, investing, finance now, we must have what? 6,800. If you now have 6,800 in the exam, don't change it. Now, let's now go now. Then we are not going to say what now? Working what? Changes in working capital. Changes in working capital. Then things that you need to include here. And just say what? Inventory. I'm going to tell you something now. Inventory. You can make mention of what? Of trade what? Trade receivable. And you can make mention of what? Trade what? At least these are the three things that we have in this question. So what you just do, just say what? Opening minus what? Closing. Okay? Opening minus what? Opening minus closing for every one of them. So now let's go to the word. You now go back to the question now. What is the opening what? Inventory? Where are you going to get that from? It's from the current asset. Inventory of last year is what? 2017, 51,000. This year is what now?
49,300.
So we have what? 51,000 minus what? 49,300. Now, what is the trade receivable now? The trade receivable of last year. Trade receivable of last year is what?
25,500.
Okay, what do we now have this year?
35,700.
35,700.
Yes.
Then let's go to the what now? To the current liability section. We have what? Payable. Payable of last year is what? Is 27,200. What do we now have this year?
24,650.
24,650. I will now give you a mnemonic now. Call TTR. There's no need of writing this in the exam. Say what? TTR. And the T means what? Trust. The R means what? Reverse. Are you with me? TTR. What the T means is what? Trust, reverse. You are going to trust the asset. You are going to reverse the liability. You are going to trust the word. You are going to trust the asset. You reverse the word. You reverse the liability. Just say what? Opening minus closing. Whatever you have in your calculator, write it straight. For assets, write it straight. There's no need of thinking. For what? For liability now, if you say opening minus what? Minus closing, whatever you have, reverse it. If you have positive, you are going to change it to what? To negative. All right, now let's start now. 51,000 minus what? 49,200.
700. 1,007.
You look tired. What happened?
Okay.
Have you been busy since morning?
Yes, I have.
Is it work?
Yeah, amongst other things.
You'll be on leave now.
Yes, I know.
So 51,000 minus this.
17.
Positive of 17, right?
Yes.
Then the next one, 25,500 minus 35,700.
10,200. Minus 10,200.
Minus 10,200. Then the next one, 27,200 minus 24,650.
2,550.
2,000.
550.
What do you have?
2,550.
As a positive number, Abby?
Yes.
Then you now change it to what? To negative now. So this is what I'm referring to. TTR. Whatever you have now, opening minus closing, whatever you have, trust it. The next one, trade pay for all assets, trust it. For liability, reverse it. I hope you get this.
Yes.
Before I will now explain further. Now, you know, in cash flow, now if you have number like this 17, this one means what? Cash inflow. This is positive. If you have something in what? In bracket like this, it means what? Negative. So this 10,200 now is as if it is what? Money is going out. This 1,700 now is like what? Money is what? Money is coming in. And that's why you can remember during the format, we say decrease in what? Decrease in asset is a what? Is a positive. Increase in asset is a what? Is a negative. Look at what now? Last year, your receivable is 25,500. Now it's not 35. It's like money is what you are spending of 10,200. Last year, you are owing someone of how much? 27,200. And this year, it has now reduced to what? To 24,650. Is money coming in or money is going out?
Going out.
Money is going out. So you can see that's why we change it. You have a positive number before, you reverse it. Assuming that it is what? It is negative now, you are going to do what? You change it to what? To positive. So what do we now have in total? Negative of how much?
I'm coming. 11,050 naira.
So what do we now have now? This is now what we call what? Cash generated from operation. So
67,150.
67,000.
67,150.
150. Please, do you understand this? This is what we call
Yes.
cash generated from what? From operation. So meaning that what this is the cash that you generated from your what? From your core
Operating
business.
activities.
Yes, your operating activities. Okay?
Yes.
Yes, sorry. Now, another thing that you cannot bring in now is we now need to calculate what? We now need to calculate, we need to calculate our tax. We need to calculate what? We need to calculate tax. So let me say this is like a what now? A working two. And let me do it here. Tax now. And we have 5 elements of what? Of financial statements. We have asset, we have liability, we have equity, we have income, and we also have expenses. Tax now to the company, do you think is a what? Can you categorize it for? Is it liability?
Expense.
And to the statement of financial position, now tax would be where?
Liability.
It would be a liability, and that's what I'm referring to. And all liability account now will have what item? Will have what? All liability accounts will have what balance? They will have a what? They will have a credit balance. Don't forget. All asset accounts will have what balance? They will have a debit balance. Assets and expenses, they will have a what? Debit balance. So liability, equity, and income, they will have what balance? They will have a credit balance. So we now need to go to the what now? We need to go to the question now and check. And there are two types of tax. That is, what's the balance brought forward? I don't know whether we have it in this question, but I'm going to maintain the two for now so that you have this as a format. We have what we call deferred tax, and we also have what we call what? Current tax. You see the DT, it means what? Deferred tax. DCT, it means what? It means current tax. And let me hear from you. Can you tell me something about deferred tax?
Sincerely, I don't know.
Okay. And when we say deferred tax now, deferred tax arises from what we call what? Temporary difference. Please don't forget. Deferred tax arises from what? From temporary difference. Temporary difference between accounting rule and taxation what? And taxation rule. In accounting, the way we deferred tax arises as a result of what? Temporary difference. Don't forget, deferred tax arises as a result of what? Temporary difference. Temporary difference between what? Accounting rule and taxation rule. Meaning that what? The way we recognize what? Tax in accounting is different from the what? The way the tax authority will say it is tax. And I'm sure that you also believe on that as well. If the what? If in accounting now, we say that what? Our tax is what? Is 5 million. If the tax authority come now, it's either it's going to be what? More than 5 million or it will be less than what? 5 million. Because in accounting now, there are some expenses that we debit the what? We remove from our profit that the tax authority is going to do what? They are going to disallow it. Or call it the what? The disallowable expenses. But in accounting, we see it as a what? We see it as a normal expenses. Just like what? Depreciation now. We remove depreciation from our what? From our profit. But the tax authority will what? They see it as a what? As a disallowable expenses. If you have depreciation in your what? In your account now, they will do what now? They will add it back. It's a disallowable expense. They will not give us what now? Capital allowance in what? In replacement of it. So now, you need to what? Look at this current liability now. We have trade payable, we have bank overdraft, and we also have what? Current what? We also have what we call current tax. We have balance of last year to be 4,250. So this is a what? A current tax. In this question now, there's no what? There's no differ. Okay, but their treatment is the same. So this is 4,250. Then we also need to, what do you close with? That is our balance CD. Our closing balance in the statement of financial position is 3,000 what? 3,400 as our what? As our tax. 3,000 what? 3,400. Then let's close the account now. Since it is a what? It is a liability, it will have what balance? It will have a credit balance. So my balance brought down now to be here. So we'll just say balance what now? Balance brought down. So this is what? CT. Don't forget, you can also have what? DT as well. So I'm just using this as the what? As a format. Whenever you have deferred tax under cash flow, it's going to be under the non-current liability. Whenever you have what? Deferred tax, it's going to be under where? It's going to be under the non-current liability. So I'm still going to say DT, and I'm still going to say what? CT, which is what? 3,400. So these are what we have in the words in our statement of financial position now. Then we now need to go back to the word to the question again that where do we see tax? Where do we see tax? We have seen one in the word now, in the additional information, which is the statement of financial position. We now need to check now that what do we have in the statement of financial position now? What do we have in the statement of financial position? You can see now we have what? You can see tax what? Tax expense. tax what? Tax expense of how much now? 5,000 what? 5,100 naira. So where do you think tax will be in P or L? Is it going to be on the debit side or is it going to be on the credit side? In the P or L, where do you think tax will be? Let me also hear from you as well. Where do you think tax will be? Is it going to be on the debit side of the P or L or is it going to be on the credit side of the P or L?
Debit side.
Yes, thank you very much. It's going to be what? On the debit side of the word of the P or L. So if it is now on the debit side of the P or L, the corresponding entry will not be where now. If we have debit the what, we have debit the P or L, the corresponding entry now, when you now open tax ledger, where is it going to be now?
Credit.
Credit. Thank you very much. So we just say what now? P or L, which is 5,000 what? 100. So add these two together now. What do we have? 4,250 plus 5,1. Then this is 350. And this is
9,350.
9,350. So 9,350 now minus 34. This is now what we call what? This is now what we call tax what? Tax paid.
5,950.
5,000.
950.
5,950. So this is what we call tax paid. And that is what we are going to use in the what? In our cash flow what? In our cash flow statement as tax paid. Add these two together, remove this. Whatever we have now is the what? Is the tax paid. So we are now going to say what now? Tax paid. 5,950, right?
Please, can you go back to that table? I want to write what you did.
Okay. I'll share it with you as well. I hope you are getting it. So can we go now?
No, please wait. I wasn't writing when you were doing it because I wanted to really get what was going on.
That's great. Okay.
I'm almost done. Just give me a few minutes.
All right, I'm not in a hurry. At least once you get it, the problem is half solved.
I'm done.
But that's fine.
Yes.
So we have the what now? Based on what I told you earlier, that but let me follow the what? Let me follow the format that I've provided for you, which is what you can see here. Interest and what? You can see interest and dividend was included here. Just like I mentioned earlier, that this interest and dividend, we can take it to what? We can take it to operating activity as well. So you have the word, you have the option, whatever you want, whatever you like. So either this interest now is going to be what? It's going to be on the operating activities, or it's going to be on the what? On the financing what? Sorry, that is going to be on the financing, or it's going to be on the what? On the operating activities. And in this question now, do we have, apart from the what? The interest, which is also known as what? Finance cost, that we have in the what? In the POL, which is what? 4,250. Do we have any place for interest again? Check the what? Check the non-current or the current liability now. There's nothing like what? There's nothing like interest anymore. So what we added up, we are also going to what? So let me include it here now. I will just say what now? Interest. Now you can call it what the name that we call it initially. Finance what? Finance cost. We just say what? 4,000 what? 4,250.
Why are we doing it 2 times?
And because why are we doing it 3 times? Is because this is what we are actually driving for. To know our what? To know our actual what? To know our actual cash flow generated from operation. But this interest now, if you borrow, sometimes it can be for what? For you to be what? For you to buy some machines so that you're able to what? You're able to sell more. So if you borrow as well, and they're also charging you what? They're also charging you interest. So that is why we are removing it. That is, this is actual cash that we generated. So what are the what? The other expenses that is attributable to this? We pay tax from it. We also pay our what? We also pay our debt holder. So it is also allowed, because sometimes you borrow. I can borrow now that, oh, I am what? These are the goods that I'm selling before, but I want to increase my output. That is, the machine that I have before can only produce, let's say what, 1,000 what megatons per hour now. So I want to buy additional machine now so that we're able to produce what, more megaton per hours. So I cannot do what now? I can borrow for that. You can see the reason why I'm borrowing now is for my what? Is for my operation. So if you are also paying interest now to the what? To that particular order that you borrow from, you also need to subtract it from what? You also need to subtract it from your operation as well. So that's why we are lessening it as well. But what we want to do initially is for us to get this. What is our actual what? What is our actual cash flow from our operation, from our core business? What is our actual money that we have? And we can also take it to what? We can also take it to finance as well. There are two. Dividend was paid in this question as well, which is also given in the what? I think which additional information is also given here. Additional information 3, that you paid dividend during the year to be what? 4,000 what? 4,250. So these two items now, it is what? It is allowed. You can bring the dividend here as well, or you can take the what? You can take the two to what? I can also say what? Dividend paid. Dividend paid of what? Of 4,250. Then I will now have the what? The last one, which is our what? Our net cash flow from what? From operating what? From operating activities.
After doing it here now, that means we will not do it in financing
Yes,
activities again.
you will not do it in investing activities again. So we have the what? The option of what? Bringing these two here, or we take it to what? Or we take it to financing what? We take it to finance. So once you have it here now, we are not going to include it in what? In the financing activities. But if I decide that I'm not going to do it here now, then I'm going to do it in what? In financing activities. So the option is what is left for us now. Okay?
Let's do it
So
like
now,
this. Let's know that what we're doing in financing activities reducing.
okay.
Is the
So now
dividend 4,250?
and from 67,150 minus all these three.
I'll say that it divided 4,250 from the question.
Yes, it's from the question. Let me go back to it. Do you see it now? Additional information 3.
I can't see your screen yet. Okay. Okay, I can see it.
All right. And there's another way that we can also check if the question is what? If the question is silent. There's another way we check whether there was dividend was paid or dividend was not paid. So investing what now? Investing activities. And just like I informed you earlier.
52,700.
What do you have?
52,700.
52,700. 52,700. So that is our what? That's our net cash flow from what? From operating activities. And this is what? This is the longest one in cash flow statement. The remaining one now, they are very, very short. So please don't forget what? Don't forget this. This is operating what? This is operating activities. Cash flow from what? Cash flow from operating activities. So let's now go to the what? To the second one now. And if you are preparing this second one now, where do we focus on? Can you remember? If you are preparing
Non-current
what?
assets.
And what?
Additional information.
And additional information. So we are not going to the income statement for this now. We are only checking the what? The non-current asset. So now look at the non-current asset that you have last year. It's 174,250. 174 what? 174,250. Then this year you now have what? What happened that your what? Your non-current asset has increased? Can you give me any reason for that? What do you think that has happened? This is the total value of your non-current asset last year. Then this is what you have this year. So why? What happened that it increased?
You got more assets.
Yeah, you buy more assets. But have it at the back of your mind that you can buy more and you can also sell small. You understand? So that you can buy more. You know, when we are talking about what this thing BOP, balance of payment, it's not as if Nigeria is not also sending some goods out. But what we are bringing in is more than what we are taking out. That's why you can have what a BOP, balance of payment, maybe it's deficit now. But now, what you have last year is 174,250. Then you have what now? 242,250 as well. Your non-current asset is what is increasing. So your non-current asset, you can buy more, then you can also sell parts. So have that too at the back of our mind. That, what we can do in this question, majority of like 80% of things that will occur now is, we buy more, then we now sell a little bit. Okay, and let's check the additional information now. You can see that we are told that the property, plant, and equipment with the current amount of this was sold for how much? Which is 24,000 what? 24,650. So what we just need to do, you just say what? PP was PP disposal. Disposal of what? Of PP, which is what? 24,650. Okay, so that means that you sell now, and the value is already what? The value already given. So now we now need to check now. At least you also buy. You sell and you also buy, because what you have last year is this, and what you have this year is what is this. So taking into consideration the one that you sell, it means that there's still what? There's still addition. There's still addition that you buy. So what we are now going to do now, then we are now going to prepare a working for now. We now need to prepare a working now for the one that you buy during the year. So I can say now that these are what now? These are working 3. You are going to say what now? PP. And most of the time, it's not a must under cash flow that you show everything in T format. You can also use tabular format as well. Okay, so it's not compulsory that everything has. But if you really understand the word double entry very well, this will be really good.
I don't understand double entry very well.
So don't worry, we'll do another one that you see. PP. So this is a asset account, right?
Yes.
Abby? So an asset account will have what balance?
Debit.
A debit balance. So balance, this is a balance going forward. Then we also need to check their what is their closing balance. So I can say balance CD now. So now I have maintained I have maintained the rule now that all asset accounts will have what balance? To have a debit balance. So let's now go to the question now. What's the PP that you have last year? You have what? What you have last year is 174 what? 174, 250. And you have what? What do you have this year?
242, 250.
Okay, so you have 174, 250. And this year you have what? 242,
242, 250.
250. And you bring it down as well. So now, if you want to increase your asset account, what are you going to do? You debit. If you want to increase your asset account, you do what? You debit. If you want to reduce it, you credit. Don't forget that. Because I want you to be good in double entry. Because you're an accountant. If you want to increase asset account, what are you going to do? You debit. If you want to reduce it, you credit. So anything that will increase the value of our asset now, we are going to do what? We are going to debit it. Anything that will reduce the value of our asset now to be on the credit side. First of all, we already have what? We are giving information about depreciation. And that's giving it the additional information. The depreciation of what? Property, plant, and equipment is how much? What's the depreciation value?
34,000.
34,000. Then you also sell. What if you dispose? Is your asset increasing or is reducing?
Reducing.
So disposal, you now check the word. You are going to pick the word. What is the carrying what? What is the carrying amount of the asset that we sell? What's the carrying amount of the asset that we sell? And it's already what? It's already given as well. This is the carrying amount of 23,000. How much?
800.
800. So we say what now? 23,800. Okay. Then we also need to go back to the question now and check. We have used the word, we have used the additional information now. Now look at this OCI. They say a property was a gain on property revaluation, meaning that what? There's one asset now that increased in what? In value by how much? It's increased in value by 17,000. So if our asset now is increasing, what do we do? Debit or credit?
Debit. But Shebi said we're not going to profit or loss again.
And yes, but now there's a word, there's OCR, there's a revaluation. And this revaluation and is a word, is a property. It's part of our word, it's part of our PP. So if you are giving what? If you are giving item of what? Once the examiner says statement of profit and loss and other comprehensive income, what you are going to have in the comprehensive income is either there is going to be a revaluation gain or there will be revaluation deficit. Either they call it loss or they will call it what? Or is that gain or loss? Or sometimes we can use deficit or surplus. Or sometimes we can also use what we call upward revaluation and downward revaluation. If you have what? Upward revaluation is just like what? Like revaluation surplus. Downward now is like a what? A revaluation what? Deficit. So we have one asset now that do what now? That increased by 17,000. So we are going to say what now? Revaluation. Revaluation surplus of what? Of 17,000. So there is no anywhere now that we have information relating to what? Property, plant, and equipment again. Once you check the statement of financial position, check the additional information, check the OCR, whether you are going to have information relating to your PP. So, and we have make use of everything now. So what we are going to do now is add the credit side first. What do you have? From 34,000 down to 242,250. What do you have?
$350,050.
Then minus 174,250 minus 17,000. What do we have? So whatever we now have now,
108,800.
that is what we call addition. So the asset that you buy now, how much do you call it?
108,800.
So 108,800. So this is what we are looking for now. This is the asset that you acquire during the year.
Wait, Mr.
So
Wasi, how do you know which side to first add?
And because this is asset accounts. So we expect the credit side cannot be greater than what? The credit side cannot be greater than the debit. Understand? But you can, let me come to your level. Let me show you another way that you can drive with me. You just say what? Opening balance. Let me change the color so that you see it. You say what? Opening. The opening now, what do we start with? I think we start with 174, right?
Yes.
174,000. And we now end with, I think, 242. Then you're not going to say what now? You are going to say disposal. And the value of the asset that you dispose is 23,800. That is the current amount of the assets that you sell. Then we're also going to say what now? Depreciation. This is what you remove this. We're also going to say depreciation. We are told that depreciation is what? Is 34,000. Then our asset also what? We have a revaluation what? Revaluation gain of what? Of 17,000. So what do we have now? This is what we call what? Expected. These are our expected. So calculate now, what is our expected?
133,450.
133,450.
450.
We now have how much as the closing balance? No, this is the closing balance. So what could have happened? This is what we are expecting.
That means there was more money.
So there was addition. That means that you buy more. So for you to not get the one that you buy now, just say what? 242,250 minus 133,450.
108,800.
So this is the addition now. I hope you get this. At least most of my students prefer this one. People that does not understand double entry very well.
I prefer it though, because I don't understand double entry.
So you can see now, you say opening, the disposal, you less the words, depreciation, anything that is going out, put it in what? In jacket. Anything that is increasing the value of our asset, make it positive. Have our expected. This is the closing balance. Compare the two together. Then you see have what? 108,800, have you?
Yes.
So it's still the same thing as well. So we just need to go back now and say what? Addition. I think that's working 3. 108,800. I know money is going out a bit because we are buying.
Wait, why do you jacket it?
It's because it has flow now, because you are buying more. And if you are buying now, you pay.
Hey, Jesus. I thought you said it's addition.
And additional, the additional is our asset is increasing. But for our asset to increase now, it's not free of charge. So that means that we are paying this value to the world, to the vendor. So if money is going out now, our asset is increasing. What you do is what? If you buy, you buy a new phone now. What's the accounting entry that you're going to pass? It's for you to credit your bank now and debit that particular asset. So we are debiting the asset now. Then there's going to be outflow in our bank as well of this particular amount. You get?
Okay.
So whatever we now have now is our what? It's our
You coming? Wait, 24,650 is positive. This one is negative. Minus 108,800. Minus 84,150.
So now have what? Net cash flow from invest. So you can see investing activity is very short. So what do you have?
84 minus 84,150.
84,150. And let me tell you something. A good company, we expect your net cash on your investing activities to be negative. Are you with me?
Yes.
A company that is planning for the future, we expect this particular one to be negative so that you buy more assets. And for you to buy more assets, where are you going to get the money from? Is when your operating activities is positive. So if your operating activities is positive, then we expect this one to be negative so that you also need to plan for the future as well. If you are making more money today, you also need to You also need to plan ahead as well. So the last one is now the financing activities. And if you are preparing financing activities now, where are you going to get the data from?
Equity,
Can you remember?
Non-current liability, and additional information.
So now let's now go to the equity now. What was your ordinary share last year?
76,500.
76,500. What's now your ordinary share this year? Your share capital.
43,500.
So what could have happened?
There's more money. There's more inflow.
No, we don't call it. You not say more money now. There's issue of what? There's issue of shares. But once you issue shares as well, issue of what? Issue of ordinary shares. Money will also what? Money will also come in as well. So we'll call it what? Issue of shares. What do you have this year? We have 93 what? 93,500. 93,500. So we are going to say what now? 93,500 minus what do we have last year? 76,000 what? 76,500. So what's the increase now? 76,500.
Oh, 17,000.
17,000. So we are going to write what now? 17,000. Then our share premium as well. There's also a movement in our share premium. And once ordinary share change, if there's a movement in your ordinary share premium will also change as well. That's like inflow of them. Once ordinary share change, if ordinary share move, whether it's increase or there's a decrease, then share premium will also react to it. So your share premium was last year is 8,500. Now is what? 17,000. So we just say what now? 17,000 minus what? Minus 8,500. What do we have?
8,500.
8,500 as well. Then we also need to go and check the next one. Retain earning. Don't touch what? Don't touch retain earning. Leave retain earning. So that means that we are through with what? We are through with the equity now. Only tamper with what? Share capital. Check what's the share capital that you have last year. What do you have this year? Retain earning. Leave retain earning. Don't touch it at all. Then the last one, which is what? Non-current liability last year was how much?
58,000.
Yeah, sorry, it's not easy. We have what? Loan notes. We have 68,000 last year. Then what do we now have this year? You can see we have 80 what? 8750. So that means that money is coming in. 80 what? 8750. So what do we have now?
12,750.
12,750. So you have checked the what now? The equity. You have checked the what? The non-current liability. Let's check the what? The additional information as well. There's nothing that is what that is here. Dividend could have been what? We could have used dividend here, or we have used it in the what? In the financing what? I'll be sorry, in the operating activity. So it's not coming in again. So add these three together now. What do we have? From 17 to what? 12.
38,250.
38,000.
250.
Now, and you can remember, I told you that what are we looking for? We must arrive at what? You are the one that make mention of it. We must arrive at what? At 6,800. I hope you remember.
Okay, yes.
Hello?
Yes.
We must arrive at what? 6,800. So if you do not arrive at 8,000 or 6,800 now, please don't change it. That's the answer. But for class now, if it does not work, we did not arrive at it again, then we'll check where is the mistake coming from. So we'll just say now. So we had everything now, starting from the first one. The first one, we have 52,700. 52,700.
Wait, oh.
Minus.
Where is 52,700?
84,150.
Wait. Okay. Okay, from the net cash flow from operating activity.
Yeah. Net cash flow from operating. Just like the note that you have, we say this is what, this one is A. This one is what is B. Then you also have what? You also have C. These are what? Sorry.
The net cash flow.
This is what? Net cash flow from what? From financing what? From financing activities. This one, let's say it is what? It is C. So our X now, based on the work, but please don't write this in the exam, which is, we have a positive balance, which is increase in what? Increase in cash flow during the what? During the year. So do you have 6,800?
I'm coming.
All right, now. I like the way I present the solution.
Yes, 6,800.
In the exam, you do not have 6,800. Don't change it. So that's it. So we can now say what now? We can now say cash and what? We can say cash and cash equivalent at what? At beginning.
We'll write it again. We've already written it before.
No, that one is your work, So this is like a solution now. So you still need to watch.
Okay.
So we now need to go back now and go and check it. Is what? 850 and 5,950.
Beginning is 5,950 minus.
Yes. So, and that is that. I hope you get this. And it's a very interesting topic. Do you understand?
I understand though. I think I'm having a problem with how you're arranging this thing. I don't arrange
My,
rubbish. So
you
under
arrange it.
this 6-8 is under the 52,700, 84,150, and 38,250 bar.
Which one are you saying? This one, Abi?
Yes, it's under it.
It's under no, we have increase. So let me delete it and write it again.
Increase in the what? In cash flow during the year.
Yes.
Cash flow.
So I hope you get this. So you can see how interesting it is.
After assist, you can now do cash and cash equivalent at beginning. Then
Yes.
now subtract it and do cash and cash equivalent at end.
Yeah.
Okay.
So now let's do the second requirement so that we use it to what the second requirement is for us to what, let's say, prepare the net cash flow from what operating activities only using indirect method. Forget about that only. Even though the examiner does not say that only, it is only the what the operating activities that will change. Every
For
other thing will
direct
what
method.
remain. Yes, using direct method. So we can now say now, and let me prepare it beside this. So if you have direct method, please, this is the format. You are going to say what? Cash receive. Cash receive from customer. That is 1. 2, can say what? Cash paid to suppliers. Cash paid to supplier. You can say 3, cash paid to employee. Cash paid to employee. Then we can say 4, cash what? Cash paid for other what? Cash paid for other operating what? Cash paid for other operating what? Cash paid for other operating, can just say cash paid for other operating activities. Cash paid for other operating activities. Then whatever we have, that is our what? Cash flow. Cash flow from what? From operation. So don't forget, this is the format under what? Under indirect. I'll be sorry, under direct. Cash received from what? From customer. Cash paid to what? To supplier. Cash paid to what? Cash paid to employee. Cash paid for other operating what? Other operating activities. Okay. So, and it's a very, very what? The very simple stuff. So let's not. I hope you captured everything. Oh, don't worry, I'll share this with you as well. So Can we move on now?
Yeah.
Let me not ask you more. For us to receive cash from our customer, what happens? What do we do? What's the first thing that will take place?
We sold.
Mm-hmm. The sold, Abby. Mm-hmm. So for customer now, which ledger do we maintain for our customer? In the financial statement now, which ledger do we maintain for customer? Can you remember? You can't see in the financial statement now, you say what? Customer. Abby? We are going to have one. Which ledger do we maintain for them?
Receivable.
Thank you very much. Receivable. You're on fire this night.
I just guessed that thing. Let's say I'm on fire this night. I just guessed it.
So we maintain what? We maintain receivable. What do you study in school?
Now chemistry.
Wow. That the journey is far.
No, when you're talking, I'm just looking at you.
Yeah, sorry. Biochemistry. Wow. So if it is ammonia acid, or what do you guys call it now? At least you remember that one.
Oh God.
If it is ethanol and the rest. But this one is not ethanol. This one is etaqua.
Oh
At least if
God.
it is all this oxygen and carbon dioxide, all this same.
I
At least
even like
I like biochemistry then. What I want to study because in my house, most of my families are engineers, so at least I have we have chemical engineering, we have someone that studies. So it was that chemical engineering that I was planning for. So I don't really know what happened. So this is receivable. Then we now have what? Balance. This is asset account, right? Don't worry, I'll be taking it small for you. No, even when you pass, you can just so that will take you a double entry very well. So that at your office now, if someone just asks you something, at least they will know that your words. ICANN is working.
they know that I'm on fire.
Don't know that you're on fire. So don't worry, double entry is now. And so we're also going to have balance here. You're going to have balance CD here. Then we'll also do what? We'll also bring it down here. So now let's go to the statement of financial position now. What's our opening receivable? Our opening receivable is
25,500.
20. This thing is starting. What happened? Please hold on.
Okay.
What is happening to this? Please hold on. Because I can't be using Excel to know. I will not be convenient. It's not like a statement stuff. Just hold on, please.
Okay.
So do you still remember all this biochemistry stuff now? Since you are left.
Not exactly.
Double entry has replaced it. So all your chemical now. You can't remember them. Not really. I'm sure you are not, because they're adding another thing to it now.
Yeah.
So 25,000. Yeah, 25,000. Oh, sorry. We started with what? 25,500. Then we end with, you can see this is what we start with, right? Then we end it on 35,700. 35,700. Then you bring it down as well, 35,000 700. So you have maintained the rule now that all assets must have what balance? They must have a debit balance. So now you're not going to back to the what? You're not going to go back to the question now and say that what is our sales, our revenue for the what? Our revenue for the year. What's our revenue? Our revenue is what? These are our revenue. You sell to the customer,
Yes.
and this is what you sell to the customer. You said what? 994,500. So you say what now? Revenue 994,500. So add these two together, and what do we have? 994,500 plus 25,500.
$1,020,000.
1,020,000. So 1,020,000 minus 25,700. So whatever we have now is what we call cash received from what? Cash received from customer.
$984,300.
9 what?
$984,300.
So this is cash received from customer. Do you understand this?
I understand, but you've not told me how you always decide to add. Because the first time you added, when we first did for tax, you added the credit side. No,
Yeah.
added the debit side. Why we now
No,
did
if it is tax, if it is tax, we add all the credit side, we now subtract the debit. So that's how we have that tax page. You get? If it is tax, but okay, let me now come to your level now. I cannot do what?
You added the credit side in tax. When we went to PPE, you added the debit side. Why?
Okay, let me go back again. Oh, where is that? This tax, Abby. Is it this one? Is it this?
Yes. Yes.
This
added
tax.
The credit side.
I added where?
You added the credit side for us to get that balance.
Yes, for the PP, right? Because this is asset account. The credit side cannot be more than what? Cannot be more than debit. So if you had all these three together now, you subtract this, then this is the balance figure. And that's why I'm coming to your level as well by doing this. In what C format is not required in Cashflow. You can just use the normal process. Like this one too, I can still derive it. Where is it, sir? Okay. But let me explain this first. This is a receivable account, Abi? And receivable is what is asset account. And that's why we just say what? You can see this is what we first pick. We pick this, and we bring this down. Then our revenue now, you sell to the customer. If you sell to the customer now, what we do is what we debit that particular customer. So if the customer is not paying now, credit his account. If you remember control account in foundation, sales is going to be on what side? Sales is going to be on the debit side of the receivable ledger. You understand? So if you sell, you would debit the customer. If the customer is paying, we do what? We credit the what? If the customer is paying, we credit the customer. So that's what we do here. Do you get this?
You have not answered my question, no.
Hey, why now? What was the question?
I said that for the 3 tables that you've done, you were adding different sides. How do you know the sides to add? Why are you not adding this other side?
We are at okay. Okay, let's start from the beginning. Now, this is the first table, tax. What's the comment here?
You added 4,250 and 5,001 to get
Yes,
9,350. Then when you now
yes,
subtracted it, you now brought it to debit side. You added the
uh-huh,
credit side. That's what I'm
yes.
saying.
Uh-huh. No, you
PPE.
see, look at this now. Let's be taking one after the other. You say I added these two together to get this.
Mm.
So looking at the tax that you are, or the outstanding tax that you have for last year is 4,250. Looking at the so I can do something like this. Look at this. The tax, I can say tax now. Opening is what? The opening is 4,000 what? 4,250. Abby?
Yes.
And this is the what? This is the closing. Is 3,000 what? 3,400. You are yet to pay this amount as at last year. You are still owing the what? You are still owing this particular amount. And that's why we have it in the liability. So in the current year as well, you also have a what? You also have a tax to pay, which is what? 5,000 what? 100 naira. What if you add these two together? What do we have?
9,350.
9,000 what? So this is the what? This is the expected. Is what? 9,000 what? 9,350. But we are now having what? We are now having 3,400. So it means that you have paid. This is the opening that you are having as what? As tax. Last year, you have this balance, 4,000 what? 4,250. Then you still have another tax that you're supposed to pay this year, which is what? 5,1. So the total tax now, if you have not paid anything at all, you're supposed to have what? 9,350 in your what? In your statement of financial position. But this company now, they are not having what? 3,4. So that means that they have what? That they have paid. And that's why we say what? This 9,000 what? 9,350 now minus this 3,4. It will give us the what? The tax paid. Which is what? 5,000 what now? 5,950. So that means that they have paid what now? 5,950. Do you get this, my explanation now?
Yes, I get it.
So normally you are owing this, and that's why you can see this one is in the what? In the current liability. This one is in what? Is in the P or L. So meaning that this one is last year now, which is what? I think 2017. You are owing 4,000 what? 250. Then you still have another one that is supposed to pay this year. So if you had what you are owing last year, please what you have now, then you're supposed to have what in your statement of financial position. You're supposed to see what? 9,000 what? 9,350. But you are now having 3,4. So it means that you have paid, and that's why we say what? Add these two together, subtract this. So whatever it is, what it is left is what? Is now 5,950. Please, do you get this now?
Yes.
Okay. Should I explain this particular PPE again? At least we use this table as well. At least on. So
You
it's not a
don't.
must. Okay. Go ahead, please. Let me hear from you.
You've explained PPE to me.
Okay, you understand. Your voice looked tired. Sorry.
Thank you.
So you can see this one as well. Cash received from what? Cash received from customer now. It doesn't what? It's not necessary for you to prepare it in what? In T format like this. Okay. You can also prepare it in a what? In the normal what? Vertical. So what we just do, we'll just say, what is our opening? What do we start with? Our opening is what? Is 25,000 what? 25,500. Then you are going to say, what is the sales? The sales is what? 9,000 what? 9,500. Then if we add these two together now, we are having what?
1,020,000.
Yes. Then we'll now say what? What do we have as at what? What is the closing? Then we just say what? Closing. What's the closing receivable? The closing what? The closing receivable now is what? Is 35,700. So whatever it is left now, this is what we call what? Cash what? This is what we call cash receipt. So it's not matter that you do what you do it in T format. T format is not really is not compulsory under cash. This is what we start with. This is the sales. Add these two together. Subtract the what? The closing what? Subtract the closing what? Trade what? Trade receivable. This is the opening what? This is the opening trade receivable. Add these two together. Subtract the closing. Whatever we have now, that is the what? The cash received from customer, which is the 984,300. I hope you get this now.
Yes.
Okay. So the next thing now, before we can now what? This is like what our working one now. We are now going to say now that working two. We are going to say what now? Working two. And in this working two now, the next thing that we have is what? Cash paid to what? Cash paid to supplier. So first of all, before we do what? Cash paid to supplier, we need to get the what? We need to determine the what? We need to determine the purchase during the year. You need to determine the what? The purchase during the what? During the year. That is, what do you buy during the year? What do you buy? Because once we are talking about suppliers now, we are talking about what? Purchase. So what we are not going to do now, we are not going to say what? What is it? We can say closing what? We can say closing inventory. What's our closing inventory? Then we're also going to say that we are not going to say what is the cost of what? The cost of sales. Add these two together. You're not going to say what now? You're not going to say opening what? You're not going to say opening inventory. Subtract this. So whatever we have now, that is the what? That is the purchase. Purchase during the what? Purchase during the year. Okay. So this is what? This is the purchase during the year. So now let's now go now using this particular question as what? As example as well. So let me just write it at the what? At the front. What's our closing inventory? Go to the what? To the statement of financial position. Our closing inventory is what? 49,000 what? 49,300. 49,300. That's our closing. 49,300. Then we need to go again and say that what's our cost of sales? Our cost of sales is what? Is 884,000. 884,000. So if we add these two together, now what do we have? Then let me get the closing. The closing inventory is what? Is 49,300. 49,300. What do you say?
Oh, that's opening inventory.
Oh, sorry. Oh, sorry. Opening is 51. Sorry. 51. Oh, sorry. This is what? This is 51. So what do we have now?
Nine 300.
933.
300.
Okay, addition of this, what do we have first?
933.
Okay, 933, 300. Then minus 51,000.
882, 300.
882, 300. So these are purchased during the year. And you can also what? You can also use the T format as well. Let me show you that one as well. So you have the option now. So, and using your word, using your background, it's the
There's the
normal
mark
bet.
workings.
What do you say?
There's the mark all these workings.
Yes, they will do now, because you need it in the statement. So they have to give you what they will give you mark that. Where do you see it from? So we can also prepare it using the normal T format as well. So we say purchase now. And purchase is what now? Can you categorize it? Is it income? Is it expenses? Is it liability? Can you try? You say purchase.
Expenses. So that's credits. I guess.
What you're not going to say now, that. But this purchase now, what do you buy? You know, it's about inventory, right? So I don't even need to don't let me even call the word. Don't let me call the ledger. Don't let me call the ledger inventory. I'll be sorry. Don't let me call it what purchase. Let's call it what inventory, because your inventory that you have now is as a result of what? Is as a result of purchase, right? Hello? Do you agree on that? The inventory that you have in your store now is as a result of purchase now.
Yes.
So now inventory is asset. Expense is also asset account. So they have the same treatment. What was the balance that we have last year? What's our opening balance? Our opening balance is what? Is 51,000. Then what is our closing balance? Our closing balance is what? Is 49,300. So let's maintain the rule. We are only going to say what now? Then we'll have what? Balance what? We have our balance brought down. Sorry. All right, let me just show you. Then what you're not going to say now, you're not going to say what is the cost of what? The cost of sales. What is our what? What's our cost of sales? And the cost of sales that we have is what? So cost of sales will be what? Cost of sales will be here, which is what? 884,000. So if we still had everything together, we'll have what? 933,300. We also have what? 933,300. 933,300 minus what? 51,000. And that will give us what? That will give us our purchase of what? Of 882,300. Okay. So the option is what? The option is allow. Do you understand this now?
Yes. So how do okay.
Do you understand it's working?
I do.
Yeah, sorry. Don't worry. Let's just finish this. We'll go now. Sorry. You look tired.
I'm tired.
Yeah, sorry. But they should relieve you a little bit from work now. At least the assistant you make.
I just had a very busy day, Sha. You know, we don't usually have class on Saturday, so I said I had a very busy day. And you know, we don't have classes on Saturdays. It was be Friday.
They'll be doing a lot. So we need to prepare our trade payable now. Payable is a what? Payable is a liability, right?
Yes.
So you need to say what's the balance, what's the balance brought forward. So we need to go back to the question and say that what payable, what's the balance brought forward? What's our last year balance? Trade payable last year is what? Is 27,200. 27,200. Then we also have what now? What's the closing what? What's the closing balance for this receivable? That's 24,060. 24,650. 24,650. Don't worry, I'll show you the vertical one as well. So we also have what balance breakdown of what of 24,650. Then our purchase, we have already determined. So purchase will be what? Purchase will be here, which that is what we have at the top, 882,300. 882,300. So we just bring the word the 882 here, 882,300. So if you add all these two together now, let's subtract this. This is now what we call what? Cash what? Cash paid to what? To suppliers. So now add it together. Let's use the normal format.
That's 509 909 500.
So 909,500 minus 24,650.
Eight eight four 850.
88 was
850.
884. 850.
850.
Thank you. So we can also what? We can also do it this way as well. But you can say what if you want to use it in the normal format. So we just say what? Trade payable now. What is our opening? Our opening trade payable is what? Our opening trade payable is 24,000. I'll be sorry, 27,200. You just say what now? 27 what? 27,200. Then we also say what's our purchase that we have determined above. Our purchase is what? Our purchase is 882. 882. 882 300. Then whatever we have is 909 500. 909 500 now minus what? What is the closing? So we just say closing. The closing is what? Is 24,650. So whatever we have now is the word cash what? This is the cash paid to suppliers. Okay, so this is how we can use that. Then the last working now, which is for us to do what? Well, you just say last working now. So let's say working what? Working for now. And this one you can prepare it in what? Just say cash what? Cash paid. Cash paid to employee. Cash paid to employee. And other what? And other expenses. So we have our admin, we have our what? Selling and distribution. What's our admin in this question now? Our admin is 21,250. 21,250. Our admin is 21,250. Then our selling and distribution is what? Our selling and distribution is 44,200. 44,200. 44,200. Then what do we have in total for this? Add this two together now. Don't worry, we are done.
65,450.
65,450. Then we say what now? Less what? Less depreciation. The depreciation that we have here is what is 34 what? 34,000. Then we say what? Had profit. Profit on what? On disposal. If it is a what? If it is a loss now, we are going to do what? We are going to subtract it. And going back to the what? Going back to the question, what was the profit on disposal? Profit on disposal is what? Is 850. Profit on disposal, 850. So profit on what? Profit on disposal now, 850. So 850 now, what do we have? That's the final thing now. What do we have? 65, 450. What do you say?
I'm coming, I'm pressing it.
Hey, yeah, sorry.
32,300.
30 what? 32,300. Don't forget, if it is a loss, you are going to what? You less. Okay? So we cannot do what now? We cannot say what is our solution now. So first of all, we are okay. Let me just put it this side. We have what? Using what? Using direct what? Using direct method now. One, we have what? Cash received. Cash received from our customer, which is what? Working one. That is 984,300. The next one, cash what? Cash paid to suppliers. That is working two. Then let's get that. Cash paid to what? To suppliers. Cash paid to suppliers is what? 884,850. 884,850. 884,850. Then we also have what? Cash what? Cash paid to employee. Cash paid to employee and other what? And other expenses. That is like our working. This one is 3. Then I think this one is what? This one is 4. Purchases. This working 3. This is 3. And this is 4. So that's 23 what? And 32,300. 32 what? 32,300. So we just say what? 32,300. So what is now our cash flow from operation? Cash flow from operation. So that's all. Then we need to compare it both with the cash flow that we have from operation as well, using what? Indirect method. They will surely be the same thing if there's no any mistake. So what do we have in total? What do we have in total?
I'm putting it together.
Yeah, sorry.
67,150.
67 what? 67,150. So now let's check now. our cash flow from what
It's the same thing.
they are the same thing. So to always be the same.
Yeah.
So you can see this one is simple.
I don't even know if this one is simple because I'm just looking at everything you're doing. I'll still have to look at this thing again.
And
It's
you
just
still have to.
just jumping in my head.
You still have to. Sure. So and I'm giving you what extra work too. I want you to. Maybe you have the pack.
I don't have the pack or
I told you say you have the hard copy.
hard copy care. I don't have any hard
And
copy. Oh. I
just
have the
okay.
study pack. Okay, study pack, not past question.
And no, I'm not. It's the study text himself,
I
financial
have the
reports.
study text. Yes, I have study
And
text.
so go to what? Go to cash flow. Go to cash flow. I don't know which chapter it is. So okay, in the current one, okay, let me check something. And let me see the current page in the new one. So you now go to what I want you to study study the direct study the direct method. You are going to see that the examiner will also in the text. They are going to provide with using the whether using the T format or you are going to use the normal vertical method.
They
So
used to
just
specify.
no. It is allowed. You can do that as well. So in the study text as well, that's where I want you to go and to check that as well. That you're also going to see the way they'll show it, especially the direct method. They'll show the normal T ledger, and they also show the normal way we have been doing it. Some of us that are coming from biochemistry. So that one is special for you. I hope you would. Okay, it's not with you. I don't know why it's taking time. So just go to what's cash flow. You check direct method. You are going to see it there. So at least tomorrow we can do some things again, right? So this is it, and I really like the way I present this solution. So let's go. We meet tomorrow by God grace. Is this certain? At
Wait,
least so that if we can.
and tomorrow is fine. That third question is theory, but the question that we're answering, the number 3.
Yeah.
Hey, wow. It's me and you that are going to fight in this exam because I don't even know what to do. I've started reading that chapter 1. It's too plenty. Directorate of this. I said, what is all these ones are big? Federal reporting, IASB, Kilo Day.
So let me show you something. Chapter 23. Okay, let me check. Let me check this thing. Cash flow form. So if you check your study text, you're also going to see, okay, this is indirect. At least you can see, right? Cash received from customer to supplier, employee, cash paid for other operating activities. You have our cash flow generated from operation. Then we'll remove our tax as well. So you can see each of them. Let's say if you want to calculate the cash received from your customer, you can see they also show it. Your trade receivable at the beginning is this, the sales in the year is this, add this together, subtract the trade receivable at the end, whatever we have now. That is what the cash received from customer during the year. So you can also present it in T format as well, the balance brought forward. Supposed to have the closing balance here as well. The sales supposed to be here, but I think in your package you're able to show very well. Then cash paid to us for raw material, that is what is the the cash your purchase during the year, the inventory at the end plus the cost of sales, remove the inventory at opening. That will give us the purchase. So, and it is this purchase now that you're going to use when you are calculating when you're calculating the cash paid to your supplier. So either you use the T format, or you use the illustration format as well. So it is not it is not a must that you must use T format once it's come to once it's come to cash paid to your to your wages and salary and
The purchase,
other.
the
Okay.
purchase is in the financial statement,
No, it
right?
is the inventory that will be in the financial statement.
Okay,
Is the
how did we
is
not calculate purchase? Hey, good.
how do we calculate purchases? By using inventory. We say closing inventory plus cost of sales.
Okay, yes,
Closing
cost.
inventory
Okay, yes,
plus,
that cost of sale. Yeah.
yeah. So the balance that I have now is the what, as you can see my screen, right?
Yes, I can.
So this is how we calculate the purchase. Closing inventory plus cost of sales minus opening inventory. The balance figure will be the purchase during the year. Then once we're able to calculate the purchase during the year, then we can now do the next working, which is what is the cash paid to our suppliers. So this particular purchase that you have on this credit side is the one that we determined at above. So what's the opening balance? What is the closing? Whatever we have now, you can see they say balance figure. That will be the what? That will be the cash paid to your suppliers. Because a supplier is a liability account. So if you want to reduce a liability account, what are we going to do with debit it? If you want to reduce a liability account, do what with debit? Is either is a liability account, is either is income account, or it is equity account. They both have the same treatment. Income, liability, and equity, they both have the same treatment. If you want to increase if you want to increase them, you credit. If you want to reduce it, you do what with debit. Okay, so that is that. So don't worry, we are still going to solve more questions on some cash flow tomorrow by God. So thank you very much. Do you have any question before we go?
Not today.
All right, now so rest now. Meet tomorrow by God. Please, before the next, try as much as at least the format. I'm really interested in that. Try as much as possible to understand the format. In accounting something, what I want you to do is that, you see, there are some topics that require formats. So the first thing that you have to do is you have to try as much as possible to learn the format. So don't just cram it, just understand it. Once you understand the format, that if this one occur, you can see where the last time that we are solving question on balance sheet, at least it shows that you understand the format as well. So once you understand the format, that if this one show up now, this is where I'm going to put it. If this one occur, this, so everything will be fine. Okay. So,
Okay.
all right.
All right.